One of the questions I get asked most often on the free strategy calls that people book with me is, I've been trading for a while, yet I am not consistently profitable. What's going on and how do I fix this? If you find yourself in this scenario, you may have picked up some bad trading habits that you may not be aware of. In this video, we'll discuss those bad habits, and one of them may even surprise you.
Welcome to the Trading with Venus podcast, where we help you establish strong trading habits, generate consistent profits, and create the lifestyle you desire for yourself and your family. Now your host, Raman Gill.
Welcome to the Trading with Venus podcast. My name is Raman Gill. One of the questions that I get asked most often is around becoming a consistently profitable trader. If you want longevity in this career, it is very important that you learn how to manage your trades as well as your profits. So the whole term of becoming a consistently profitable trader doesn't mean that you always win all your trades, but it means that you're able to pull profits out of the market. A lot of times people come to me and they say, oh, I was doing great before I lost my entire account. Now, how does that happen? How do you go from trading very well to trading so badly that you lose your entire account? In talking to a number of traders on this issue, I have learned that there are some bad habits that a lot of traders pick as they go along in their trading careers. And it is very important for us to, one, recognize these habits and then try to fix these, because unless you fix these bad trading habits, you actually cannot become a consistently profitable trader. So what are these bad habits? First of all is FOMO, or fear of missing out. A lot of times I find that people will just jump into trades because they see the trade moving, price is moving, things are moving, and there's just stuff going on the chart, and then we just jump in. What most traders don't understand is, why is the price moving? There are so many different reasons as to why the price may be moving. One, it could be that a news announcement just came out, and as soon as the news announcement comes out, price will move. Now, just because the price is moving, it doesn't mean that it will continue to move in that direction. Many times when the news first hits the wires, we see an initial move, and then it could actually turn around and go in the opposite direction. So it's very important for us to understand why the price is moving. So if the news has just come out, give it some time, give it 10 minutes to really see what impact the news has on the market, and then look for a pullback and get into that trade instead of just jumping in, because most times it will pull back. Another reason the price may move is because a comment has come out. President Trump may have tweeted something, or there may have been a comment out of UK around Brexit, from European Union around Brexit, from Saudi Arabia in terms of oil. Any of these comments can move the market, or from Iran because they're going to work on their nuclear program. Any of these comments can actually move the price, but many times these moves are short-lived, which means there will be an initial reaction and then the move unwinds. So we do not want to get caught up in these moves. So the best thing to do is understand why the price is moving. Instead of just looking at the price, it's moving fast, and just jumping in, take a few minutes to understand why the price is moving and is it doing what it's supposed to do. So if a comment comes out or a tweet comes out and there's a knee-jerk reaction, just stay out of it. Recognize, does it really have an impact on the market, or is it just a knee-jerk reaction? If it's something that's just purely causes a knee-jerk reaction, stay out of it. If it's actually a comment or news that really is market moving, well, then you can take the trade, wait for the pullback, and then enter the trade. So just understanding what's causing the price to move will help you stay out of those bad trades, and then everything that gives you anxiety. So it will actually make trading a little bit less stressful. So that's the first thing. Another bad habit that I have seen people get into is using too much leverage. Now, leverage is a great thing. It helps us take trades that are bigger than the amount of money in our accounts. So it's perfect, helps us make bigger profit as a result of that. However, it is a two-edged sword. That means if we can make money doing this, we can actually also lose money taking extra leverage. Many times people get excited, they get into trades, and that trade doesn't go too well, so they take extra trades, and then you start adding trades to your account, and before you know it, you are carrying such a big trade size that you are not able to stay in that trade for any given period of time. I have seen day traders do this, I have seen swing traders do this, and I myself have done this and have blown accounts doing this. So I find this is one of the biggest mistakes that traders make. So what do? First thing is, before you take that next trade, again, understand why you're taking a trade. So take an extra couple of minutes and actually write down for yourself why you're taking that trade, the reason behind taking that trade, and then go review that at the end of the day. If you're not comfortable putting that reason on the piece of paper, that means you should not be in that trade. Because when you go to review it and you have to look in the mirror and tell yourself why you took that trade, and you're not comfortable admitting why you took that trade, you have no business being in that trade. So just a simple step of actually writing it down will keep you away from a lot of trades. So understand why you're doing it, and then only take the trades that fall into your trade plan. Now, you did create the trade plan, right? When you did your market analysis ahead of time. And if you're not doing your pre-market analysis, make sure you join me. I do daily market analysis. It's free of charge. Then this gives you a reason to at least look at your charts ahead of time and prepare for the following day. So do not over leverage. Make sure you understand why you're getting into the trades, what your profit targets are for each trade that you're taking, and just write it down. Because I find when I have a poor reason for entering a trade, I don't want to write it down because I don't want to admit even to myself that this is a poor choice. So there's that little hack you can use and keep yourself out of poor trades. Another reason I have seen people go through this ups and downs in the market and blow their accounts or go through this really distressing period is because they are trying to overcompensate. So if you get into a losing streak, and we all do this, so don't worry about it. Just because somebody is a more experienced trader doesn't mean they don't get into losing streaks. I do, I'm sure you do, and most traders do. When we go on losing streaks, what I find a lot of people do is they actually start doubling their trade size. So instead of becoming more conservative, they're actually going all in. So it's like throwing the baby out with the bathwater. You do not want to overcomplicate the bad situation or make it worse. So make sure you keep your trade size the same or actually drop it. So while you're trying to figure out the market, you can at least be safe. So make sure you do not take too much leverage, but don't even take the trades that are double the size. There's this strategy where a lot of people will say, oh, I lost one, now I'm going to put twice the risk on the next trade, and then you lose the second one, then you're putting 3 times the risk on that. That strategy does not work because you're adding to your losing trades. And that doesn't work effectively unless you have a solid plan on how you do this. I find a lot of people will actually get into an over leveraged situation doing that, and then they have trouble closing out these losing trades because the loss has become so much. So this is a habit that we want to stay away from. If you find yourself doubling the size of your trades, especially after you have been going through a losing streak or you have lost a few trades, make sure you recognize that and stop doing it. Either stop trading, give yourself a little bit of time to normalize, or at least reduce the size of your trades. So have you found yourself participating in one of these bad habits? If so, put a comment below and tell me which bad habit have you picked up and what are you going to do to fix it. And Make sure you join me in my daily analysis so that you are prepared for trading the markets. Just do a search for Trading with Venus if you're listening to an audio podcast, or if you're on my YouTube, make sure you comment below and tell me what bad habit you've picked up and how you're going to fix it. And make sure you join me for my daily analysis. Every single day I do free daily analysis, and you can take a look at what trades I am looking at, what my profit targets are, and what the entry or the pullback levels are that I'm looking at. So make sure you go to my YouTube channel and you subscribe to the channel so you'll be notified when I put that video. That's it for today. I'll see you next time.
If you want consistency in your trading, we invite you to join our daily market analysis calls, where we provide the levels to find the best entries and targets on an intraday basis. For a 1-week free trial, please visit www.tradingwithvenus.com. Thanks for joining us today. With much gratitude, your show host, Raman Gill.